Friends, hi everyone! In this video, we'll break down all the hottest things happening on the market right now. We'll talk about the US shutdown and how it could affect crypto. I'll explain why today I'm looking at the market in an ultra-bullish way and why I believe a real bull run is ahead. But that's not all. We'll also cover a few very interesting altcoins that are showing strength even against the backdrop of all this news. And of course, we'll discuss investor sentiment, key indicators, and what you should keep in focus right now. So don't wait, subscribe, hit the like button, and let's go.
3, 2, 1, fire!
Friends, before we move on to the market overview and then to promising coins, please note that this video is not financial advice. It only reflects my personal impressions and market view. Always do your own research and invest wisely. Let's start with the big news. On October 1st at 12:01 a.m. Eastern Time, the U.S. federal government officially went into shutdown. Why? Congress failed to agree on either a full budget or even temporary funding. That means the country is now in a pause, with major political overtones. Where did the system break? Republicans pushed for straight funding until November. Democrats wanted to extend ACA subsidies, keep Medicaid untouched, and launch new social programs. The Senate blocked both versions. Not enough votes to hit 60. Right before the deadline, the Budget Office even demanded agencies start mass layoff plans. The Trump administration, in turn, openly used the shutdown as a pressure tool, saying there would be layoffs and expanded presidential powers. What does this mean in practice? Some federal services are already closed. National parks, grants, research. Other agencies are running on limited capacity. Around 750,000 federal workers may face unpaid leave or job cuts. The cost to the budget, about $400 million a day. Key macro data releases are in doubt. That means we may not see labor market reports, CPI, or other Fed indicators anytime soon. Now to the markets, and this is where it gets interesting. U.S. indices opened down. Not a collapse, but nervous. Gold spiked to new records. The dollar, weakening on risks and political uncertainty. Here's the key point. In such conditions, crypto can actually benefit. Some capital is looking for alternatives, and a weaker dollar adds momentum to Bitcoin and alts. And of course, there are the loud voices like Tom Lee throwing out numbers in the 12,000 to 15,000 range, but that's more of a dream scenario, the kind of if everything lines up and Wall Street makes Ethereum its main asset. But there's a flip side. Missing data is a problem for the Fed. Without clear signals, it's harder to decide on rates. And a long shutdown could directly hit GDP. Every week, minus 0.1% growth, plus regulatory risks, delays in crypto laws, licenses, ETFs, all could be stuck in limbo. Meanwhile, politics adds chaos. Republicans blame Democrats for blocking. Democrats push on social spending. Polls show most Americans are against the shutdown, with many directly blaming Trump or Republicans. So the picture is clear. The shutdown is already hitting government services, data, and sentiment. And at the same time, it could be the factor that draws even more attention to crypto as an alternative asset, especially with a weaker dollar and stronger gold. So let's talk about some very interesting data that could give you more confidence in the market. But before that, make sure to subscribe to my channel so you don't miss out on important updates. Friends, let's zoom out. Today the market is split in two. Some are convinced October will start with a crash, others that from here until the end of 2025 it's only up. But the truth, as always, lies in the middle, and you find it not in emotions, but in numbers and history. Let's remember September. Historically, 8 out of 12 times it ended in the red, so sentiment was clear. Everything will go down. But this time, for 2/3 of the month, we were only going up, and only at the end did we get a sharp dump. The reason is simple. The market was overheated with longs, and the wave of liquidations wiped out everyone playing with too much leverage. That same cascade we've seen before. Now for October, this month is special in crypto. Historically, 10 out of 12 times it's been bullish. Add the fact that we're at quarter end, and 8 out of 11 times in this cycle, quarter endings have been positive. That means the stats are clearly leaning toward a green scenario. But as always, there are nuances. First nuance, FTX repayments. Today comes the third tranche, nearly $1.6 billion. And here it's important to note the pattern. Usually it's a classic, buy the rumor, sell the news. Ahead of the event, everyone buys on optimism. On the day itself, much of the market takes profits. So a short dip is absolutely realistic. Second nuance, global liquidity. M2 is generally rising, a plus for risk assets. But the trend always has pullbacks, and right now we could see one. Another reason why early October may be unstable. Third nuance, macro. ISM PMI. If it climbs back above 50, it signals economic recovery and often the start of a true alt season. Unemployment, paradoxically, slightly higher rates would be positive, giving the Fed more room to ease. And of course, the shutdown. Historically, it rarely kills markets. Usually, we see a small dip before, sideways action during, and solid growth 12 months after. So, panic here is definitely unnecessary. So what do we have? In the coming days, volatility and even a small dip are possible. But if we look at the whole quarter, the odds of a strong bullish finish are very high. My strategy is simple: hedge both ways. The core position in the market is already there. I used some cash during the last dip. Another part is waiting to deploy if the FTX sell the news scenario plays out and gives us another entry. That way, I stay in the game no matter where the market swings in the short term. And the most interesting part, altcoins are holding up much better than in past years on bad news. It's a subtle but very strong signal. Risk on is gradually returning, which means that after this short storm, the market could open a new growth wave. So, shall we talk about altcoins? But first, make sure to subscribe to my Telegram channel. I share even more news, insights, and cover major events like this one in detail. That Bitcoin was preparing to break the 114,000 to 115,000 level. And that's exactly what happened. BTC made the breakout and moved much higher. I highlighted this back when most people doubted it, so if you don't want to miss insights and analysis like this, make sure you subscribe. Here, we break down the market right on time and straight to the point. As you've already guessed, I'm pretty bullish on the market, so let's talk about some altcoins. Let's dive into Solana. And there's a lot to discuss. Right now, the news flow around Solana is extremely strong and could be a key catalyst. First, everyone's watching the ETF, and here the picture is mixed. On one hand, the US shutdown could delay any SEC decisions. If the government isn't working, pending filings stall. That's a risk for the Solana ETF, just like for Litecoin. But on the other hand, the SEC has already removed delay notices for several crypto ETFs, including Solana and XRP. That's a signal they're ready to speed things up. What's more, insiders are saying approval could come as early as next week, between October 6th and 10th. This matches the fact that issuers have already updated their S1 filings, included staking terms, and aligned with new standards. In other words, everyone's preparing for launch. Bloomberg analysts even put the chances of approval for spot ETFs, including Solana, at around 90%. Naturally, the market is feeling this tension. When SOL dipped to around $190, traders saw it as a discount entry and started loading up to front-run a possible SEC decision. The logic is simple. If approval really comes, it could push price to $240 and beyond. Now let's check the technicals and on-chain. On the chart, key support is at $195 to $200. If that zone breaks down, we could easily see $185 to $190. Resistance is around $218 to $220. If SOL closes above that, the path opens toward $240 plus. What are the big voices saying? Lark Davis tweeted, "A close above $218 is a breakout signal with potential to go higher." CoinCentral analysts said, if $215 breaks, the target is $240. If $200 is lost, risk of dropping to $185. The takeaway, Solana is at a crossroads. If the ETF gets approved, we'll likely see a new wave of institutional money and major upside. If regulatory uncertainty drags on, SOL might keep chopping in the $190 to $220 range a bit longer. What do you think about this coin? Are you holding it in your portfolio? Friends, now let's turn to BNB. Things have been hot here as well. Recently, the official BNB chain Twitter account was hacked. The attackers spread phishing links to some meme token called 4. And what did the community do? Some users started buying this fake token, pumping its price by more than 500% in a sort of collective trolling move. Even the attack turned into a local meme, proving once again that the Binance community is still sharp and resilient. The BNB price itself quickly recovered to around $1,020. CZ promised to track down and compensate victims of the hack. And right after that, BNB Chain kicked off October with positivity by lowering gas fees to stimulate ecosystem activity. Binance also launched its BNB Reaches New Heights promo with rewards to highlight the token's milestones. Against the backdrop of the alt sector, BNB has shown noticeable growth in recent months, in some periods even outpacing Ethereum's performance. But the question is, can it sustain this pace? Here's where forecasts diverge. On the conservative side, analysts suggest BNB could range between $900 to $1,050 in the coming months. That's the sideways scenario, with Binance maintaining ecosystem stability, but without major catalysts. Stability is good, but don't expect explosive upside. The more optimistic camp, however, sets targets of $1,200 to $1,300 already in 2025. They're betting on Binance rolling out new services, deflationary mechanics kicking in, and the broader bull run providing another push. In that case, BNB could set new all-time highs. And then there are the ambitious forecasts calling for $2,000. But let's be honest, that's speculative. For that to happen, you'd need a perfect mix of factors: massive institutional support, favorable regulations for Binance, and a full-blown global risk-on environment. Anything less, and those numbers are more headline hype than serious analysis. Now to Aster, the real story of recent weeks. The project surged almost 2,345% in a month and became the #1 topic on crypto Twitter. Big players jumped in hard. Galaxy Digital invested hundreds of millions. Open interest in derivatives climbed above $1.2 billion. And then there's the CZ effect. Officially, he says Binance has nothing to do with Aster, that he's only an advisor through WiseEye Labs. But the paradox is, the more he insists, the more the community links Aster directly to him. And when CZ posts lines on X like, "Aster competes with Binance but helps BNB," it only adds more fuel to the fire. By the numbers, from a $2.3 peak, Aster dropped nearly 30%, now consolidating around $1.70 to $1.90. If the 1.7 to 1.8 support holds, there's a chance of retesting highs. If it breaks, the door opens to $1.3 to $1.5. Warnings are growing louder. The growth was too fast. Token concentration among whales is high, and manipulation risks remain. So what do we see? BNB remains strong, even after hacks and noise. Support around $1,010 looks solid. Aster is a hype rocket with huge risk. If it backs up hype with real metrics, it could stabilize. If not, the pullback could be painful. And above all, one factor dominates: CZ. His words move markets. As long as he's actively pushing both BNB and Aster, attention and capital will stay locked onto these stories. Friends, let's take a look at Ethereum, because right now, there's a very interesting story unfolding. On one hand, institutions are clearly coming back. In just one day, spot Ethereum ETFs saw over $547 million in net inflows. Looking deeper, the pace has slowed noticeably. In September, inflows were only $285 million compared to $3.9 billion in August. So yes, money is flowing in. But the question is there enough fuel to keep the market running? On-chain data also shows contradictions. On one side, the network has cooled. In the last 30 days, transaction count is down approximately 16% and fees approximately 12%. But on the other side, more Ethereum is leaving exchanges than entering. That's a signal big players don't want to keep coins on centralized platforms, suggesting they're preparing for long-term holding. The technicals add more intrigue. On the weekly chart, a clear bull flag pattern is formed, a classic setup that often breaks upward. But for now, Ethereum has been stopped at the 4,200 to 4,300 zone and rejected lower. If we break through this level with volume, the path opens toward $4,600, $4,800, and even $5,000 plus. If not, Ethereum could keep chopping sideways in the 4,100 to 4,400 range for a while longer. Now to forecasts. Citi is cautious, putting Ethereum at around $4,300 by the end of 2025, factoring in macro risks. Standard Chartered is more bullish. They see $7,500 if institutional demand keeps rising. So we've got three scenarios. Bullish, break above 4,300 to 4,350, opening the move to 5,000 plus. Base case, sideways between 4,100 to 4,400 with the market consolidating. Bearish, a drop below $4,000 with confirmation, pulling back toward 3,800 to 3,500. What should you monitor to spot bullish or bearish signs early? ETF flows, exchange balances, L2 and TVL activity, staking levels, whale movements, and of course macro factors. From Fed rate decisions to the US shutdown. Verdict: Ethereum is standing at a decision point, and the move could come at any moment. If the breakout is confirmed, we could realistically see $5,000 to $6,000 in this cycle. But remember, this is crypto and nothing comes without risk. And that's all for today. Remember, these are just my thoughts on the market, not financial advice. Always do your own research before investing. Thanks for watching. Subscribe, hit the like button, and stay tuned for the next coin reviews. See you soon.